Welcome, Internet Capitalists, to episode 30 of The Big Show. We are officially adults now, 30 years old, 3 decades worth of shows. I'm coming to you from a very snowy Gibsonia, Pennsylvania, just north of Pittsburgh. And Ben Joe is in the banking capital of the New South, Charlotte, North Carolina. Ben Joe, how are you?
Pretty good. We're expecting a blizzard of 1 to 2 inches of snow here in Charlotte, so we'll see how the Southerners can deal with that. But happy to be here.
That's awesome. That's awesome. So it's been an eventful week in the markets. I know you don't advocate looking at short-term candles, but things were climbing and it sort of kind of hit the skids a little bit. Can you pull up that chart?
Yeah, we'll look at Bitcoin first,
Okay.
and let's see if I can pull this up. Okay, here we go. So it's funny looking at the chart because not really anywhere close to a legitimate bearish trend. A lot of analysts are expecting us to trade back down potentially to the mid 80s, 83,000 being a common target. But we really went on a monster run from Bitcoin crossing its previous all-time high around 69,000 up to 108,000, and it was about time for a market cool off, and that makes a lot of sense to me. And then there's this whole idea of we really pumped on the November 4th election, Trump being selected as the president, and people thought that the run up to his inauguration this month, which is occurring in like 10 days, was that period where we kind of repriced that in, and now we're correcting a little bit because of that. And on top of that, we have less confirmation about more than one Fed rate cut in this upcoming year, which is another potential factor. But considering all of those things, the markets don't look too bad. And I actually think that a lot of this, maybe not just for Bitcoin and maybe for some altcoins as well, but we're a little bit oversold on this move. But we'll see. We recovered here a little bit, so we'll see what happens. Any thoughts on your end?
No, I kind of agree with everything you said. Yeah, I think that's
Yeah,
exactly right on.
yeah, and ETH and some of the alts are down more than Bitcoin relatively. So ETH's around 32.87 right now. Took a big run of that, and altcoins are down anywhere from 20 to 80% for some meme coins. A lot of the Solana meme coins have been getting crushed, and a lot of the AI coins, which saw big runs the last few weeks to month, really are getting repriced down, and those are crushed. But overall, the markets look fairly healthy, and this is just a regular bull market pullback, in my opinion. But that's where we're sitting. Any other charts you want to look at before I move on?
Now, we've got a chart later on about the alt season, a couple like charts in there we can take a look at. The thing that's interesting to me, Ben, is that kind of we're in a time of no news. There's no big news. And that doesn't mean there's bad news. It just means there's no news. The market's chugging along. Things are continuing to happen in a good way. And, a little bit of the euphoria buying kind of isn't there because there's literally no news. And that happens.
Yeah, I think that the sentiment is actually pretty bad on crypto Twitter and elsewhere. But this is really just because most of crypto Twitter is completely
Yeah.
in altcoins, which are down a lot. So like those memes and a lot of AI tokens about the top, you're down 50 to 80% on those, which is pretty rough. But all things considered, the broader market, Bitcoin, ETH, and some of the other majors aren't down nearly that bad. And the long term structural bull patterns have not shifted yet. And I think there have been some overreactions about people thinking we're going into a bear market here, which I just don't see any evidence for that at all. I think we're repricing in right now on this move down, the fewer rate cuts for this upcoming year.
Hmm.
But who knows, that could change. I think people are radically underestimating the what the regulatory shifts will do for DeFi tokens, will do for all of this in the United States. And also just the fact that Trump wants risk assets to go up. He's really incentivized to increase liquidity in the system and to have markets go up. That's kind of his thing. And I think people are overly bearish at the moment. So I'm a buyer here and not financial advice, but I'm still pretty bullish. I think this is a healthy correction, and we'll see how the market reacts in the coming weeks during and after the inauguration on the 20th.
Absolutely. No, that makes a lot of sense to me. A lot of sense.
Yeah, awesome. Well, you want to go into the first topic you had there? What's the
Yeah.
first thing you wanted
So
to check out?
AI is the big narrative of sort of the this month or 2 month period. And a guy I really respect, Justin Beavis from Conclave. His group does Codex, which is an AI uh, agentic interface that's going to be released, and they also do Ironclad on Mode and a couple other platforms on other chains. But anyway, he wrote an article about the true cost of AI. And I read it. It was a great article, well thought out. But I thought a little deeper and a little more long term about that. And, the thing that's missing, and I actually felt useful being old, the thing that's missing is kind of perspective of where we are in AI. So there's some comments, over the last 35 to 40 years, Moore's law more or less held steady, maybe except for the last 5 years. And that is that processing power or transistor count doubles every 18 months. Um, so kind of went back and took a look. And in the past 40 years, sort of my adult life, transistor count or processing power has increased 10 million times. That's 7 orders of magnitude increase in processing power. And getting back to this cost of AI tweet, in that 40 years, AI didn't do anything. AI was sort of in this desert of nothingness for 40 years until, in spite of this increase in processing power, until the Google paper that introduced transformer technology. And when that happened in 2017, that algorithm jump started uh, all of these new applications, all of these new companies like OpenAI. And where I went with that was, in this article we're talking about, well, we need to do X, Y, and Z because the cost of AI is too little. And there was a comparison to OpenAI can't make money even with $5 billion of revenue. So the comparison I just came up with was, well, there are about 200 million people that have Amazon Prime, which is about $139 a month. I don't think it's unreasonable worldwide that OpenAI could have 200 million annual customers of the not the commercial but the consumer like me that pay $139 a year. In that context, that's a $25 billion plus up in a product they already have just as market penetration grows. So while I do agree that at this moment in time, there is a cost problem potentially with AI, what I'm seeing is this is going to scale now similar to Moore's Law. And in 5 years, we could have 8 times more, either 8 times better AI or 8 times cheaper AI, in which case all this discussion goes away. And I guess my comment, to him and other of these really smart AI researchers is don't get too hung up on the money yet. Focus on the experience because the money's going to quickly drop. And if you can capture users and capture, and I called it a priceless experience with AI, then you're going to win in the end. Um, so that was kind of my take on this in a historical perspective. Now, you didn't obviously live any of that. So I'm curious to hear what you think if you've had a chance to think about it at all.
Not much. I do have a couple thoughts. So, what was his point? Just that. What was his point from the original article? That he
That it's
doesn't
kind of
think there's a good incentive or cost structure for these businesses yet.
yeah. There was a I guess my take on it was he thought there's a need to use um what I want to say platformed AI to do things because everybody having their own was cost prohibitive. Now that's may not be exactly the take, but certainly the gist of it was AI is still expensive.
Okay, my general, I didn't read this article, but my general take on, and there's a couple things here. So
Yep.
there's applications and products built on top of base layer LLMs, and then
Yep.
there's the base layer LLMs, which that is a very high barrier to entry business because you need a vast array of data and you
Yep.
need a lot of compute. So there's really only a few companies doing it, and it's the big tech companies. So right
Yep.
now, OpenAI is one of the leaders. They kind of had that first mover advantage, and they had the first product out, and everyone started using it. So that's an advantage for them. And then you have Google on one end, who has perhaps a different strategic advantage, which is their data access. So they have a shit ton of data from Google search and also from YouTube, which gives
Yeah.
them, I think, a huge leg up on the generative video side, because that is the best repository of video on earth, and anyone else is going to have a really tough time competing with that. So they kind of have the advantage there. And then you have XAI is the most intriguing to me. And these are the three that are most intriguing. Facebook, Meta kind of took a different approach with open sourcing and is hoping that they're going to build like an ecosystem of products on top of Llama, and that's kind of their approach. And I think there's some good strategy to that, because it is possible that like these base LLMs are just commoditized. They all get good enough, and then it's just about the products built around them. But for X, I find it really interesting because there's nowhere else where you can get real time news feeds and real time data about what's happening right now, other than Twitter. It is by far the best at that, and that data is X's. So if they can really integrate that data streams into AI, they're going to have a huge advantage there. So I guess to me, it just is yet to be seen who wins there. And I actually think the costs are almost irrelevant because of
Right.
how powerful the technology is. It's so much money will go into this because there could be one or multiple winners, and it's going to be so world changing that the money will just keep coming. So I haven't thought too deeply about it, but that's my perspective on the general landscape on the base layer LLM side. And then the products, it's just about, like you said, making good products. I think that will continue to evolve on its own, and you can choose the base layer LLM that you want. But on the product side, you really just, same thing as always, just talk to customers. We're in the early days of integrating this into software products and crypto products, and the more time goes on, the better it's going to get. And I think that's just the market will figure that out. It's very good at optimizing for the best product or service, and that's how capitalism works. And I think that's just going to be the force that plays out in crypto and elsewhere. And we can talk about like why crypto has an advantage in terms of developing AI products in some respects, and some disadvantages. But that's my general thought.
Yeah. No, I think that's good. And when you say XAI, you're talking about the technology that X is developing that powers Grok, for example.
Exactly. Yeah, it's a division. It's a division of X. You can get it on Twitter. They have their standalone app, which just launched like yesterday.
Yeah.
And Elon's talks a lot about it, but they're continually training multiple models. And again, direct. You can ask Grok right now what is the latest on the California wildfires. It can give you that, and then give you links to real time tweets, which is something that I think that's a ginormous advantage.
Yeah.
So yes.
Yeah, I had a really cool experience this week with AI, actually. I was trying to get in touch with my accountant to ask him two questions. One, what I need to do to establish residency back here in PA. And the other one was a more complicated question about Roth IRAs. Wasn't getting back to me, so I just said, hey, ChatGPT, tell me what I need to do to establish residency. It literally created a cut and paste sheet, step by step, of things I need to do for my spot.
Mm-hmm.
Same thing for the IRA. It was crazy how detailed yet clear the instructions were. And, I basically screenshot and sent them to him and said, you guys are going to be out of a job soon for those, basic type questions, because, this stuff is just amazing right now. And there's gigabrains working in the space, and they're going to, they have the launch pad with transformer technology now that they're going to just flourish with. So anyway, this is not a show about AI, but I wanted to bring that up because it was in that context. And it's just very cool what we're seeing. And it almost privileged to be an adult and being able to see this happen now.
Yeah, I think again we're a little bit outside of our wheelhouse, so the specifics I don't
Yeah.
know as much about. But the one thing I do know, like being in tech, being tech adjacent, just seeing how these things are evolving, is the world is going to change a lot. Like these things are super powerful, and people don't even know what they're doing. People don't even know that there's bots on Twitter that have access to financial accounts via crypto rails and are tweeting, making trades, doing all this stuff. I
Yeah.
told my friends that, and they were mind blown. I was like, yeah, like the AI agent's a millionaire. He
Yeah.
has this token. He started chilling it. He trade all this, and I don't think people realize, and this is just the early days. Like this technology is not that old. The overlap of crypto and AI is not that old. Really, it's the first real applications that have gained steam have been it's the last few months.
Yeah.
So it's very, very early days, and I think this is radically going to change how we work, how we live. And that's not a new take, but just wanted to put that out there. And that is why 2025 is the year of crypto times AI, I think. And you saw a lot of like the early hype cycle with these AI agent platforms. And I was never sure as a trade, it was a good trade. But long term, I'm not that bullish. People keep talking about frameworks, and there's certain value capture strategies that like AI 16Z and virtuals can do. But over the long term, I think the value accrual is going to operate differently. And I just think a lot of AI enabled apps are going to capture most of the value, not some sovereign agent running around. I still do not understand that thesis at all, in my opinion. So
Yeah. Ben, on that take, I'm gonna double down on that and basically say, unless and until these protocols get people that know about how to market to non-crypto Twitter folks, to the normal population, they're going to be limited. Because hype's gonna go away. Now, as the chart you just pulled up shows, hype is still here right now on AI. And by the way, before we go anymore, I'm not going to use the word DeFi AI. It's called AIFi. All right. That's what I'm going to use. I don't. Whoever made that up, I've decided the person's wrong. It needs to be AIFi.
you know who made it up actually?
Some important person I saw.
Well, it's you don't know. You weren't here last cycle. Danny Sesta. So I got rugged by this guy like a couple times last cycle. He had a bunch of protocols. He had Magic Internet Money, which is just like a collateralized debt protocol like Maker, but with more Degen aspects to it. They had like a DPEG event where I lost some money, and that kind of sucked. But then he also had an Ohm fork called Wonderland Finance, I believe. And this was just like I believe that completely imploded. I can try to find the chart. But yeah, he's been around, and he was like a main character that kind of died last cycle. And he has a new platform actually, and he coined the term DeFi with the AI at the end. So that's something to watch. But I don't know, man. You can't strong arm the market. You can't tell them they'll just do whatever they want.
Well, I can do it at once. I just said I'm calling it AIFi.
That's fine. That's fine.
Yeah, exactly. Well, anyway, I appreciate you pulling up this big green box that shows AI is. Is this a joke? Is it 69.69% of the mind share?
68, 69.68.
Okay.
I think it's real. Yeah.
Okay.
Wait, check out this chart though. Danny Sesta's project last cycle, Wonderland.
Yeah.
Look at that chart. Look at that chart.
That's not good.
No, not good. This is classic Ponzi right here. But
Yeah.
enough about that. But crypto, AI, crypto, and we're kind of transitioning actually. It's worth mentioning this. The narrative from these AI agents just running around to crypto times DeFi. I do think you got that right. I think that's the next iteration of this. And we start to see real products in 2025 and beyond. And you're right. I think to get it into normal people's hands, like we have some work to do. But again, crypto people will be the first adopters. And I think these tools and platforms are really going to start to proliferate, and DeFi will look very different a year from now.
Oh yeah, absolutely. I don't have this handy, but I'm going to post it on my Twitter account. The guy interviewed, Wrench Corze from Giza, they posted today, and they enabled a new aspect to their Arma uh, technology that allowed it to do swaps between USDT and USDC to optimize yields. And that sounds so simple, but to me, that's exactly what I want. So I don't have to do that kind of stuff on two assets that are pretty risk free from a crypto perspective, anyway.
Yeah, no, that's super cool. And it's funny, it's because it's an actual product. And in crypto, a lot of the things that pump aren't actual products. It's everyone's playing this game. It's a meta, it's a narrative, and people trade the coins and you get unreal valuations.
Yeah.
And but now I think this is the first meta in a while because we had meme coins. We've had a bunch of things this year, meme coins being one of the primary ones. We've had the hyperliquid still hanging around. We've had focus on DPIN for a while. We've had a bunch, but the thing about this one is that there's substance to it, and I actually think it is transformative for the industry, and has a chance at reaching escape velocity for the greater public. So this one excites me. I agree. Where the trade is, I'm still not sure, but we're placing our bets, and I think AI, DeFi, AI, crypto is super strong this entire year.
Well, we should just say, I know you can chime in if you want, but I've placed my bets on Mode as the hub
Yeah,
for all
that's
this stuff.
for
You know?
sure. I think Mode's a great play, and we've talked about it before a bunch
Yeah.
and seen good returns so far. But I still think the market has not caught up to a lot of investments like Mode and others that are going to perform very well if they continue to execute. So we'll see. But yeah, Mode, fantastic project. I think if ETH gets its rally this year too, L2 tokens in general have those tailwinds, and then Mode
Yeah.
specifically as an L2 and AI platform is big.
All right, well, let's move on a little bit here. So I'm going to turn this one more over to you because this is a charting thing, basically predicting everything is set up for a run in altcoins right now.
Yeah, I mean, we'll see. It just depends on what the majors do, you know. So it's basically saying Bitcoin had to break out from this accumulation range. Total three had a bit of a breakout, and then the others, which basically represents the remainder of the coins that are not the big market cap. I think it just includes everything except for Bitcoin, ETH, and maybe Solana as well. Not positive, but hasn't had that breakout yet. And you know, like it's a decent argument if you're pattern matching from last cycles. Everything just went parabolic, and there's people who believe this is going to happen again.
Yep.
I'm not sure if I think that we'll see a crypto wide rally across every single coin, just like 5 to 10xing. Like I'm not sure that happens anymore. Like the reason it seemed to have happened in like 2021, and I was super new then, so I can't comment super well, but just the conditions. It was like COVID with stimmy checks, rate went to zero, and it was just really interesting liquidity conditions. And
Yeah.
it's just not like that anymore. Like the financial conditions are much tighter. Rates are going to stay around where they are at least for the foreseeable future. Um, and there's other catalysts for sure. I think crypto fundamentally is more bullish, but I think it's in the market's maturing. I just think it gets more selective in what pumps. So people are betting on this. Personally, I actually wouldn't just bet on any given coin because of this. I don't think that's how it works. I think returns are going to be more distributed, more sparse, and in terms of what actually does pump. But yeah, we'll see.
Um. So on that note, one of the specific types of coins that could pump that is going to benefit from tailwinds are utility coins because they're going to get regulatory clarity. And some of the biggest protocols we've talked about this and we're interested in Lido, Aave, Uniswap are probably going to get the green light to do whatever the hell they want to do with the treasuries they've accumulated. Um,
Yeah.
so those sorts of utility coins will continue to be, I think, they'll suffer like other altcoins, but they're a heck of a lot more likely to rise in rising markets.
Yeah, I think like you're not going to get like the 100, 500x from these, of course, because they are larger market caps. But I'll give you a trading strategy here, and I am following this to
Yeah.
some extent as a trader. So I feel comfortable holding these coins for those reasons. From a fundamental perspective, I could hold them for a year, and if the crypto market's down, then like they'll be down as well. But you know the project's not just straight up going to die.
Right.
Like Lido, Aave, Uniswap, for instance, are some of the most used, highest TVL products, and they're going to be around. They have large teams. They're deeply entrenched in DeFi and crypto culture, all of that, and they will outperform in a bull market. So if you're trading and you're trading a liquid portfolio and you think you have a bullish bias for the market for ETH, for instance, these often trade like ETH just at higher beta. So they'll just move
Mm-hmm.
more up whenever the market goes up. And then if you are down, you feel okay because they are solid businesses fundamentally with huge TVLs, huge treasuries, huge cash flows. And I think starting literally this year and with this administration for the next 5 years, this is the first time those things actually might start to matter. So if you
Yeah.
want to trade these things, I feel like the risk is decreased just because of that. So I really like trading these things for this year. I'm fundamentally bullish. I'm bullish on them as a category. So I do see DeFi tokens having a good year.
Yep. Okay. I agree.
Yeah.
Well, let's move on, and I'm going to keep this in your court. You sent me this I think it was a tweet, and it's called "Investing Behavior of Young Degens" and essentially why it may not be irrational. So
Mm-hmm.
you and I have talked about this a ton. It's definitely something of your generation that I tend to think is true. I tend to think it's true, and you have a good reason to believe it. So go ahead.
Yeah, I'll pull it up, and
Yeah.
I think it just stems fun, and then I can read his arguments. But okay, we'll start with the first one. Like the value of money isn't smooth; it works in step functions, especially in a world where you can't mathematically save your way to a good life. No one cares about compounding at 6% pre-tax. It does nothing for you with high future uncertainty. I think this is super true. Like in an
Yeah.
era where we're in like the late stage cycle, just like going based off of Ray Dalio's theory on the rise and fall of nations and what
Yep.
happens to late stage economies like the United States, and maybe we grow our way out of it. But as the dollar continues to depreciate over time, you really have to outperform that. And in an era whenever inflation is persistently lower and conditions are more stable, then you can have the situation where you just have a 9 to 5 job, you save for the way, you can provide for a family and some kids, and that just is no longer the case. And a great way to earn these outsized return is in financial markets, and especially in a world driven by technology like crypto, like AI. If you are in the space and understand the trends, then these assets are likely to outperform. This is what is running the world at the moment. This is where all the attention is in business, and it's only going to continue to increase. It goes back to our talk at the beginning of the show about AI, how it's going to transform the world, and I think cryptos really tied to that as well. So I really just think that those are the trends that are continue to drive the future, and there's a lot of opportunity there if you understand it and spend a little bit of time there. So any thoughts on that
Yeah,
initially?
well, I think the biggest thing here is that, let's just say generalizing, people my age look at people your age and like you're an idiot for investing in crypto. But I mean, the fact of the matter is, in like my parents to my lifetime to your lifetime, it used to be, and this isn't a sexist comment, but a man could go to work, he could come home, his wife could stay home with their two or three kids, and they could have an incredibly middle class, good life. Um, that dynamic changed where right now, two people my age that are in their 40s or 50s, yeah, if they both go to work, they can have two to three kids and have a very, very good middle class life. But that's changing quickly. That what's next? You're not going to put the kids to work. You need some asymmetry there in how you earn money and make money. And your generation, I think, maybe is seeing that you can't have what you want and have the lifestyle, a middle class, good lifestyle. And these alternative ways to invest help you re-achieve that. And you have to embrace those.
Yeah, and it's funny because it just like it really changes based on how people view risk as well. And I've talked about this before, but like if you're the way the financial industry views risk is about volatility. There's some truth to that. Like you need to be able to meet your life obligations as they come. So you need to have the cash to do that, or be able to convert your assets to cash to pay for things, because we pay for things in cash in this world.
Yep.
But that's only one way to look at risk, and it works really well for like managing those drawdowns and giving you a 95% confidence interval that your portfolio will be in this range between then and then, and you're going to attain this average growth over time. But in my mind, that's not the only way to quantify risk. There's also the opportunity cost.
Yeah.
It is what's the opportunity cost of not having a piece, and you could argue that you could buy tech stocks to this as well, but not having a piece of the future of the economy in terms of AI, in terms of crypto, in terms of these other sectors that are growing really fast. And if you're by the S&P, then that's one way to get exposure. But there's an opportunity cost there as well, because you're not accessing this other universe of assets. So that's risky. And I just think that you're missing out. And it's funny because it's the same type of thing. Like, you think about it, if a kid 5 to 10 years ago told the parents they're not doing a job because they wanted to do YouTube or this and that, that's dumb. That's not safe. Like, it's higher variance for sure, but they didn't anticipate the rise of the creator economy, and the opportunities are going to these people. So it's like younger people can see where things are going better just because they're less entrenched in like a static worldview, I think.
Yep.
And you can see where the puck is moving, and things that appear risky by traditional standards aren't actually risky. They're just looking at where the world's going and positioning accordingly. And that's how I view a lot of these investments. So I even take issue with saying that a lot of this is super risky. Depends what you mean specifically about asset allocation, about what you're doing with your life. But it's just, if you're using this very single faceted definition of risk, then it just, I don't think that's the right way to do it.
Yep. Good. I think, I think everything in moderation for your particular age group. I don't want to say that. No, that's something an old person would say. And a good example is our portfolios. I mean, you've said this on the show before. You have over 100% of your net worth in crypto.
Yeah.
I have like 12, and it was 8, and that's not going to go any higher, just because of where we are, our stations of life.
And it's just, it's all different. Like, it's all about choices, what you're comfortable with. But it's like, we talked to, I won't name anyone, but some of your friends who went with like a traditional, it's safe financial advisor,
that's
right?
a good example.
Earned a 3% on average per year over a long time on like a significant amount of money, and it's huge opportunity cost. If they would have even just allocated 5% to crypto, that probably would have exceeded their entire returns from that.
100%. I mean, they lost money.
Yeah, and if you look at, it's funny too because people keep saying this, but if you look at crypto, it is the best returning asset class since it's existed by far. It's not even close. Like, you can pick out an individual asset elsewhere, like Nvidia, whatever. Just take it as an asset class. It has had the highest growth, and people are like, they just don't like it or haven't looked into it or something, so they think that's not going to be the case. But like, as an investor, you really refuse to allocate because you just think it's wrong, even though it's outperformed for over a decade. Like, that seems a little weird, you know? So
yeah,
I just don't understand the resistance. And I think of course, I think people are changing their tune. And I'll go back to one last thing. I think most people, especially in areas where they aren't experts or don't know a lot themselves, just defer to like authority and defer to whoever knows what they're talking about. And a lot of the time, these people actually don't know. And like, for the last 5-10 years, like, the traditional financial system, financial advisors, and even the biggest in the space, like Warren Buffett and other, Jamie Dimon, have not liked crypto. So they just listen to them and just adopt their opinion without looking into it at all. And that's actually changing. And that's another catalyst for crypto that people don't talk about on a social level. That's just changing. Like, BlackRock and others are saying it's good now. So people are just like, all right, it's good.
Well, then Ray Dalio.
Yeah, Ray Dalio.
He said, "Oh, this Bitcoin thing, there's something to it."
Yeah, exactly.
And he's a gigabrain in the historical big thinking space, right?
Yeah,
that's what he does.
So macro, long-term trends.
Yeah, and they're the ultimate. They're the ultimate cater to the boomer people, right?
Yeah, exactly.
So that's all good stuff.
Yeah,
and that's fine. We're early. Everyone watching this podcast is early.
Yeah. So that's all good. I guess we can move on from that then. We can talk about a few more things. So this is cool. You want to talk about this?
Yeah. So this is going to lead into talking about the Superchain, but this Pollock dude, who I believe is one of the founders of Base or a Coinbase guy, I follow him on Twitter. He seems like an important guy. Basically, literally said one of their plans for 2025 is to tokenize coin on Base, which is an obvious thing to do. And, you say, oh, that's a publicity stunt. Well, okay. But what if this platform that they create to tokenize Base is then adapted to every stock in the world? That's the true changing nature of what, in this case, what ETH can do, the tokenization of real world assets. And when people that are credible like Coinbase find a way to do that, it's going to open the floodgates. And I'm going to go full circle to something from an episode probably 3 or 4 months ago. The Texas Stock Exchange is going to be the native home for this stuff, it seems like.
Yeah, I think we've talked about this a lot, so I don't think we need to go too far into it.
Yeah.
But I think this is inevitable. I think this is really like the core the core innovation of crypto technology. And I think it's actually two things now after saying what's possible. It's tokenization really is the end of it. You just need the regulation to get real assets on chain. You just reduce the bloat of the financial system significantly and connect global markets much more tightly than they ever have been. So that seems extremely obvious. And we've seen the rise of stable coins. That's only going to continue. And I
Mm-hmm.
just think tokenization just is a huge 0 to 1 moment for the world and it just takes a long time to play out. So
Yeah.
that's huge. And then the other one is AI. I do think like integrating AIs into crypto, giving them a native financial system in which to operate is massive. And I think these two things are just the decades long trend of why programmable blockchains, specifically Ethereum, for a variety of reasons, are extremely bullish and are just going to experience massive growth. And
Mm-hmm.
I think we're far from over. And those are the two reasons
Yeah.
for me.
Yeah. You know, Ben, this is a kind of meta comment. You know, crypto and tokenization, it's so big that it's hard to get your brain around that this could literally replace the plumbing of the entire worldwide financial system and level the playing fields across the board.
It
It's
will.
that it's
In my mind, it 100% will.
and the guts of it is not largely, it's free, it's open source, and anyone can look at it, which is, I mean, in a hugely capitalistic society like America and any developed country, that's like unheard of, right? And Charlotte in 15 years could have the highest unemployment rate in the South if this works, right? All the
Yeah.
people in all those tall buildings downtown could be out of a job unless they retrain themselves or whatever. But it's such a big opportunity. It's hard to mentally understand. Like, it touches everything, so you just forget about what it's touching because you can't comprehend it.
Yeah, it's infrastructure for the financial system. It's
Yeah.
funny because the financial system is confusing. I don't know how all of it works, but like, if you think about it very, very basically, all it is a bunch of contracts and a bunch, like the money in your bank account isn't even real. They literally just put the number there. The Federal Reserve can press a button, change the number of reserves the bank has. They can just change your number. It's just that it's numbers and contracts, abstract ideas representing ownership in a specific thing. It's like, if you own a treasury, you own a cash flow from the United States government with a principal repayment at the end. It's just like a abstract idea. If you
Yeah.
own a company is not a physical thing, they have physical assets, but it's just a idea. And then if you own that stock, you own a piece of that. It's all abstract, all contracts. You can just put that in the digital format and you don't need all of this extra bloat, all these extra buildings, hiring all these extra people. You can just subsidize that through these computer networks we call blockchains, and then it can replace that. And
Yeah.
that's, in my mind, it's just a better solution, and it connects global markets. It's more transparent, as you mentioned. It includes more people. It's just better fundamentally, and it's like early medium stages at this point infrastructurally, but it just makes sense. So over the long term, this is where the financial system's going
Yep.
to move, and it has these tailwinds with AI, and it just makes so much sense to me.
So I'm gonna pull in geopolitics now. And the place in the world with the strongest contract law system
Mm-hmm.
is where?
United States of
America,
America.
United States of America. And that's why, independent of whatever the hell else Trump does, and I'm not a fan of his at all, but that's why him being in office for crypto is a huge thing. He can buy ETH, he can do whatever. But the fact that a pro crypto president is in office in the land of the most powerful court systems to protect contract law, I think is very, very important as we go forward.
100%. That's why
Yeah.
it's crypto is such like a fit for American values. It really
Yeah.
is. Like at its core, America at the time it was founded was extremely libertarian,
Yeah.
extremely. And you can argue about like at the in the current state of society, the Libertarian Party is this or that. I'm not talking about that.
Yeah.
I'm saying like as an idea, like
Right.
the idea that you go to this country, everyone is a sovereign citizen with certain inalienable.
Cool.
It's extremely libertarian. And
Yeah.
that's what crypto is. It's a similar type of thing. And I think like we built them like that and it was open for anyone to use. And now we're slowly building on like the necessary systems and checks on top of that. to maintain things, to check things, to make sure people aren't breaking the law. But at the very bottom, the ethos of the system is open to all. It's very libertarian, and
Yeah,
that's where it matches the United States.
absolutely.
Yeah, so the foundation has to be like this, and the foundation of the traditional financial system is not like that. It's very gated. It's very opaque. It's not. It's not like that at all. So that, in my mind, it makes a lot of sense.
Absolutely. No, I agree with that. Um,
Yeah.
all right, so we're talking big picture now. Let's talk about our favorite big picture, Superchain. If you pull this, there's a couple tweets. Pull the first one up. Yeah, that tweet right there. Amazing. The Superchain accounts for 50% of all L2 transactions, and essentially it 3.5x in TVL in 12 months, which I think is pretty darn good growth. Now, base actually took a lot of that, and that's fine. Um, Next stat there, daily transactions exploded 1,600%, which is craziness. Honestly, is craziness that happened on just on the super chain. These guys continue to amaze me that they set in place like their retro funding and all that stuff with this vision for the future 4 years ago, 5 years ago, 6 years ago, and it sort of is working. Now, I don't know how much retro funding base gets, but the whole ecosystem has this built-in growth mechanism that seems to be working, and they're doing some good stuff.
Yeah, I think yeah, it was a good design. I think the biggest get, and I've said this multiple times, but for the super chain was base. It's the
Yeah.
BD. It's they got the exchanges. Their BD is super good, and I think that's what matters at the end of the day. Like base was huge. It's as a fast user friendly chain. It's basically base, Solana, and then a few other competitors. Like Hyperliquid's maybe more crypto native. Sui is kind of making a rise, but that was huge,
Yeah.
and it's made itself relevant for that. And it's very base is very aligned with optimism as a whole. Like they have close organizational alignment. I know that for a fact, and just on chain, obviously with the retro public goods funding, etc.
Yep.
So I think that's huge, and I think this growth continues. I really like what they're doing, and I think it'll be really interesting to see how it continues. But the growth has been great, and love the super chain modes on the super chain. I hope
Yep.
that as interoperability improves, which we're getting some big updates, I think early this year in
Yep.
terms of that, where the different like Coinbase. Imagine for a second what the base chain and Kraken's Inc. L2 could do. Maybe you're a user of both exchanges. You can enable some super cool products there. Then you have like really all of the AI innovation happening on Mode. You can export that and it's all seamlessly interoperable.
Yep.
I think that's just super cool. So the super chain, a lot of potential synergies. I think you're going to see some really, really cool fintech type, consumer type products on the super chain. And I think the growth just speeds up.
Well, let's not forget about Sonium on the gamer side.
Yeah, I haven't even looked much into that since they announced the release. I
Yeah.
think that'll probably heat up too. But they do really have all the pieces, and I know there's like a few other chains focused on more institutional RWAs, like real estate things like that, on the super chain. And yeah, they're doing great, and I think it's a great team, great product.
So, I'm thinking kind of big picture again. Like if essentially the super chain has, because of base connection to Coinbase and future Sonium's connection to Sony, they have essentially an unlimited amount of money in crypto terms to do development. They don't have to go to VCs. Coinbase throws off money. Sony throws off a gazillion, bazillion dollars. They can fund their products more than the rest of the entire market is funded.
Yeah,
And they're both, I mean, Sony is a consumer products company. That's what they do. Coinbase is as close as you can get to a consumer products company in the crypto space, and they are on the super chain. And I know we sound like we're super chain maxis and all that stuff because we are, but the facts are undeniable if you're willing to look at it and put any biases aside, in my opinion.
yeah. If you're, it's funny because I feel like whenever I'm talking about crypto, you can talk about trading and markets, and sometimes it's completely disconnected from like the actual innovation and actual tech. And I think it's super clear that the
Yeah.
super chain has not completely won, but has a huge head start on like consumer type products, interesting fintech products, just because these close ties with Coinbase and Inc. And I don't think you can really argue with that. Whether it will see like the best gains in terms of the asset, like Coinbase says they're not going to have a token for
Yeah.
base, and who knows otherwise. And like, is that where you should invest? I don't know. But it just struck me as funny, like how divorced those two things are in crypto
Yeah.
markets. Because, and maybe that matures one day. Maybe we're like looking at cash flows and we really price in fundamentals. I don't know, but yeah, I just had that thought.
So what is this? This is the
No,
top.
it's just DeFi Llama. So this is
Yeah.
all the Ethereum chains, Ethereum L2s essentially, and it just gives you a bunch of stats on DeFi Llama about them. So
Well,
pretty
in
interesting.
that base optimism, this is top 15.
Yep.
Mode are Fractal as well. They're all part of
Yep.
the Superchain, right?
Yep. Yep.
Yeah.
So yeah, these are great. Interesting stats to look at here. Pretty funny that Blast is still this high in terms of TVL. They raised a lot of money, so that kind of makes sense. I guess probably some contracts
Yeah.
there keeping the TVL on there. Yeah. So just like bringing this up all the time, but look at all these chains Ethereum has.
Yep.
Pretty crazy.
Very crazy. Real quick, pull up the next tweet. Yeah, this is just a rando. This is a little bit more than a random guy making some predictions here. I assume that he had something, in mind, or he based this on something. But this is ridiculous to see predicting 5x growth. I don't think my gut says that's not possible, but hell, you never know.
No, well, it's very possible because assume ETH accounts for like half of the TVL there. TVL growth isn't
I
so
gotcha.
TVL is a very flawed metric just
Yeah,
because it's super tied to the tokens worth. So like it's like Solana's TVL 100x, and it's like the Solana token went up, and then like yes, there were some other stablecoin deposits. So that's why people look at stablecoins a lot as a key
yeah,
metric. But I think this is very possible because of that. And last thing, we're getting the Unichain. Okay, last thing, like topic of discussion here. We're getting two big launches very, very soon. One
yeah.
is Unichain. Very interested to see how they roll that out, what it's like. I know it's a general purpose chain, but it's very focused on the Uniswap DEX, obviously. We'll see what gets built there and see what kind of integrations with the superchain it has. I think there will be many, but we'll see. Two is Barachain is coming. Barachain, they've been teasing it hard. The pre-deposit vaults across multiple protocols have started, which if you want to join that, I will put that in the description because I do have a referral code where you can get boosted rewards. So I'm going to self-shill there.
Yeah.
But two big launches. I'm super excited to have some new stuff to try out. I think I will be on Barachain a bit, see what pops up. And yeah, Unichain will be super interesting as well.
Awesome, awesome. I only had one more thing, but it's not really about crypto. It's about the housing market. Did you have anything else you wanted to talk about?
Um, what else happened this week? Not much else. I don't think. Yeah.
Okay. Well, that's been a good 45 minutes. That's been. I think you know what. I'm going to toot our own harms here. I think our shows are getting more interesting. I'm feeling more engaged. My brain feels like it's going more. Thinking about these shows, talking about it. I don't think we're always right, but it's certainly fun to put this out there and see how everything evolves.
Yeah, I think it's good. I think I'll have more time now too because of not having class anymore. But I think focusing more on like the week to week crypto Twitter, crypto native narratives is good because we do talk a lot of big picture stuff, which is good.
Yeah.
I think you need a balance of that. But I also do think that like a lot of the narratives are super important. If you're looking to make money in short
Yep.
term trading, which is what a lot of people in crypto do, then you
Yep.
need to understand that stuff. Oh, the last thing we didn't mention was that the other reason for the down move in prices was because the U.S. government was green lighted to sell billions of dollars in Silk Road Bitcoin, and that was a reason why we kind of tanked. So and there's some speculation about whether they have already sold that or not, and that's to be debated. But that was another reason for
Yeah.
the negative price action this week.
Well, as signing off, I want to put a note in that your newsletter is back out twice a week. Wednesdays is the more news oriented one, and the weekend one is more op ed. Your thoughts. So go sign up. at internetcapital.xyz for that.
You know what I'm
Um,
thinking? I'm
what?
thinking now that I'll wait till Trump's in office because then definitely be safe. But maybe I just launch a newsletter token. Internet Capital token might be coming then, just for fun. Why not? We could build it in. I think
Yeah.
it'll be allowed. Maybe we'll do some benefits. That'd be pretty cool. So
Yeah,
maybe
man,
we'll be a media company with a token. We'll
I
see.
like it. I like that. I like that. And feeding into the media company, we did our 7th interview this week, which came out, and super excited. And I did a little background research. Next week, we're going to be interviewing the founder, CEO of a $1 billion alternative investment company that has on the order of, let's say, 200 million in crypto assets in the US here. So really excited to talk to him about, you know, big time uses of this for real applications. And that'll be, we're teased out a little bit, and that'll be coming up.
Awesome. Sounds good.
All right, Benjo, that's all I got. Until next time, Internet Capitalist signing off.
All right. See you guys later.